manager in Abita Limited furnishes you the following information for the year ended 31st March 2026. Okay. Basic salary up to 31st October 50,000 per month. Basic salary 1st November 2025. From 1st November 2025, the salary is increased 10,000, which is 60,000 rupees per month from now on. Okay, appa. The November, December, Jan, Feb, March 5 months 60,000 rupees per month for up to October, which is for 7 months. April, May, June, July, August, September, October. For the 7 months, the salary is 50,000 per month. Note the salary is due and paid on the last day of every month. They have to give this information because sometimes when the salary varies from for specific types of specific months, for n number of months it is 50,000, for certain number of months it is varying, then we have to be given with this information last day of the month or whether the salary falls on first day of the month. This should be given so that we can do the calculation properly. So now, dearness allowance not considered for retirement benefits. So they have clearly mentioned this is not forming part of salary. So 40% of basic salary. Okay, dearness allowance. Dearness allowance, we already knew that this is to meet the day-to-day expenses of the employee. Okay, then bonus equal to 1 month salary paid in October 2025. Okay, so basic salary is 50,000 plus dearness allowance applicable for that month. What is 40% of 50,000? 20,000. So totally 70,000 they have given bonus in October. Okay. Contribution of employer towards RPF account of the employee 16% of basic salary. So 16% of the basic salary employer has contributed. Okay, wow. Employer, we knew that 12% of the above 12% only taxable, so up to 12% is exempted. So we need to calculate what is 12% of his salary. For that we need to calculate what is his salary and all. This is something we have to discuss. Professional tax paid by employer, which tax paid 2,500, of which 2,000 was paid by the employer. So this was an obligation by the employee, but made by the employer, which means this 2,000 is taxable right now. Okay, this 500 is been paid, which can be later deducted from the gross salary. Okay, facility of laptop and computer was provided to Mr. B for both official and personal use. Cost of the laptop is 45,000 and computer is 35,000 were acquired by the company on 1st December 2025, 4 months ago. Okay, December, Jan, Feb, March. Then motor car owned by the employer, cubic capacity engine exceeds 1.6 liters, exceeds 1. This is a big car provided to the employee from November 1st of November 2025, meant for both official and personal use. Repair and running expenses of rupees 45,000 from 1st November 2025 to 31st March 2026. These 4 months, repair and running maintenance were fully met by the employer. Okay, the car is owned by the employer, expenses also met by the employer, which comes under third category, and which the car cubic capacity exceeds 1.6 liters, which is a big car. So now you tell me how much 2,400 rupees is what taxable, plus if it did they give driver? No, the motor car was self-driven by the employee. So only 2,400 multiply by number of months is 4 months, which is around 4 into 2,400. 4208, 4416, 9,600. Leave travel concession given to the employee. We know that leave travel concession in a black of 4 calendar years, we can travel for 2 years if it is air, economy class, if it is train, first class AC, and all his family like wife, first 2 children, or if it is twins, 1 plus 2. Or if it first baby is twin babies, then 2 is alone. What can be considered? 1 daughter aged 7 and twin sons aged 3. Cost of the air tickets. Economy class reimbursed by the employer 30,000 rupees. Fully exempted. And for adults 45,000 rupees for 3 children. Aged 7 and twin sons 3. It is also be exempted. Mr. B is eligible for availing exemption this year to the extent it is permissible by law. Why they have to give the information? Because we don't know whether it is the third time for him in the black of 4 calendar years. So they have clearly mentioned that he is eligible, which means it can be exempted. Compute the salary income optional tax regime in the hands of Mr. B of the year assessment year 2026-27, which means the previous year is 2025-26. Okay, let's start the sum. First, particulars, we should have written particulars. Here we have written rupees. Okay, but unfortunately, considering the as a time concern, we did not write it. Starting from the basic, for the first 7 months the salary is 50,000. How did we get it is first 7 months? Because up to October means the financial year starts from April. Financial year ends with March. Okay, financial year starts from April 1st. April, May, June, July, August, September, October. 7 months he was receiving 50 months. But suddenly what happened? The basic salary from November 1st, it is increased to 60,000. From November means the salary is going to receive on November itself, right? But for 30th of November. So November, December, Jan, Feb, March. Next 5 months is going to receive 60,000 rupees per month. Okay. Now 50,000 into 7, 3.5 lakhs. 60,000 into 5, 3 lakhs. 3 lakhs plus 3.5 lakhs, which is 6.5 lakhs basic. Basic we have done. Thumbs up. Now next, what they have given, dearness allowance 40% of basic salary, not forming, not considered for retirement benefits. This they have given. So not forming 40%. If it is forming, when calculation of salary, we will consider DA. But this time we will not consider DA because it is clearly mentioned that DA is not forming part of retirement benefits. Not forming part of salary. So what is 40% of basic? 40 into 6.5 lakhs, 2 lakhs 60,000. So use the calculator. 6.5 lakhs multiply by 40%, which is 2 lakhs 60,000. Okay. Then comes the bonus. What did they say? Paid in October on basic salary, 1 month salary, which is basic salary plus dearness allowance. So, but we have to understand whether the basic salary is 50,000 or 60,000. Which is on October. October means 50,000 basic salary, and dearness allowance is 40% of the basic salary, which is 20,000. So 50 plus 20, 70,000 is what bonus received on October by the employee. Is it there? Good. So now, employer contribution to RPF, note 1. What is employer contribution to RPF? What is RPF? Recognized Provident Fund. This is something we have already discussed in the previous video. For government employees, statutory Provident Fund. For non-government employees, if it is recognized Provident Fund, 12%, 9.5%. For employers' contribution, about 12% of the salary is taxable. For interest received on Provident Fund, 9.5%. Above 9.5% is taxable. Okay. So this is for recognized Provident Fund. In case of unrecognized Provident Fund, it is exempt now, but when he receive lump sum after retirement, then it will be taxed under the head of salary in terms of employer's contribution, and the interest on employer's contribution, interest on employees' contribution will be taxed on income from resource. So this is provision. This is something we have already discussed. If you want to have a look at it, this is what I'm talking about. See, about 12% of the salary is taxable, about 9.5% of the contribution is taxable in case of recognized Provident Fund. In case of unrecognized Provident Fund, exempt right now when we receive, but when you receive lump sum after retirement, see, employees' contribution and interest thereon. Employees' contribution and interest thereon is taxable under the head salary. Interest on employees' contribution is taxable under the head of income from other sources. This is what I was talking. Okay. Now coming back to the question again. So now you could see going back to the note 1. Where is the note 1? The note 1 starts from here. So first we need to calculate salary. Why we have to calculate salary? Because the provision is 12% of the salary, about 12 up to 12% of the salary is exempted. So now we need to know what is a salary. Salary is basic plus DA forming plus sales commission. Did they give? Is the DA part of salary? No, it is not forming. Okay. So 0. Sales commission 0. Only the basic. So the salary is 6.5 lakhs. What is 12 percentage of 6.5 lakhs, which is 1 lakh 4,000? No. The employee's contribution. Okay, the employee's contribution to the recognized fund is 1 lakh 4,000. 6.5 lakhs multiplied by 16% is 1 lakh 4,000 that they have contributed. Now up to 12 percentage of the salary is exempted. So we need 6.5 lakhs multiplied by 12 percentage is 78,000. This is exempted. Exempted means we have to deduct, we have to subtract from the employer's contribution, which is 26,000 what we get finally. So this is what taxable. So employer's contribution to the he has contributed 1 lakh 4,000, out of which only 26,000 is what taxable, because up to 12 percentage is exempted. Got it? So this is note number 1. Professional tax paid by the employer 2,000, because it's a taxable perk. We need to understand what is taxable, tax perks and tax-free perks, and it is clearly mentioned that 2,000 was paid by the employer, which is obligation of the employee but met by the employer, which is something which is taxable. So 2,000 is tax perk. Now, facility of a laptop and computer was provided to Mr. B, both official and personal use. Cost of the laptop 45,000 and computer is 35,000 were acquired by the company on 1st December 2000. Company itself, they have bought it on December. Now, facility of laptop and computer is tax free. Forget about the date. Facility of the computer and a laptop, because he is using it for office purpose. So if had the company not given the laptop or computer to the employee, he would not work properly, or he would not be able to finish his office work in home or probably in an office. So computer and laptop, even if it is for both official and personal use, looking at the word personal use, we might get confused. Okay, it might be something taxable. No, laptop and computer, if it is both use, official and personal use, is completely tax free. Okay. Now, here comes the car facility. Now the car facility, this is something we have already discussed. This belongs to the third category, because they have clearly mentioned that the car owned by the employer and the expenses met by the employer, third category, and it is a big car because 1.6 cubic capacity, which is a big car. So as per the provision, 2,400 rupees, but it is only, we have to calculate for 5 months. Why? Because looking at the question, from November, so November, December, Jan, Feb, March were fully met by the employer. This is what we have to calculate. Right? So provided to the employee from November. So it was given only starting from November. It is not right from the beginning of the financial year, April 1st. So we have to calculate only for 5 months. So 2,400 into 5 months, which is 12,000. Did we get it? Are we clear up to this point? Are we clear till now? Okay. So moving forward, leave travel concession. Explain the provision. Leave travel concession, this is something we have already, in a block of 4 calendar years, 2 times you can travel. Air, economic class. If it is train, first class AC. And the whole family, wife, children, dependent parent, brothers and sisters, exempted. Leave, okay. Because it is exempted, because they have clearly mentioned that he is eligible in this current calendar year. It is clearly mentioned, as you can see here, that leave travel, Miss B is eligible for availing exemption this year to the extent it is permissible by law. Okay. And aged 7 years and twin sons, 1 plus 2 is here is okay. But if the first baby is twin, which means the first twin 7 and the followed by 3, the last baby will be under the tax. It is taxable. And whatever amount that we have to calculate, and we'll put it as a taxable amount. Okay. That's it. Now, adding everything together, it is coming around 10,20,000 rupees. Now, the deductions follows. 16(1)(a) standard deduction 50,000. Why it is standard deduction? Because to meet the daily expenditure of the employee. Because if the employee sits in the home and he doesn't work, If the employee has to go to the office, he has petrol expenses, diesel expenses, and all this stuff. So to meet the daily expenses in order to work, the government is saying that you can reduce 50,000 rupees if it is a OTR and 75,000 rupees if it is a DTR. I'm talking about old and new tax regimes. 16(1)(a). Section 16(3) is professional tax paid by the employer. 16(2) is not applicable because entertainment allowance itself is not given in the question. So after deducting this 52,500 from 10,20,000, now it is narrowing down to 9,67,500. Done. Okay. So before we move on to the next question, had the DA forming part of salary, then 6.5 lakhs is not the salary. 2.6 lakhs DA will also be added. Why DA? Because 40% of 6.5 lakhs is 2,60,000. 2,60,000 plus 6.5 lakhs, 9,10,000. 12% of the salary is 1,09,000, which can be exempted, but the employer contribution itself is 1,04,000. So, and now the taxable amount of employer contribution is nil. That should be, you don't have to say 26,000 this time. You will say simply nil. Then the gross salary will be different and the final income from salaries also will be different. Had the DA forming be part of salary. Right? This is a beautiful sum. Next sum, it's an important sum. We'll see it as a new video.